Hi folks, in today's video I'm going to be going through my Trading 212 account and my Vanguard ISA for the month of March. The past week or so has seen a gradual decline of global stock markets, which on one hand makes you cry a little bit on the inside, and on the other hand it does present a couple of buying opportunities. So I have been buying this month. I'm looking forward to taking you through what I have been buying. Just before we get into that though, I need to clear up a little bit of admin for the channel. Hi folks, I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, frugal living, passive income, generally trying to make your money work harder for you. Subscribe if that sounds good to you. So the admin to clear up, the first thing is that the second prize winner of £100 for the January giveaway has not claimed their prize. So that £100 is up for grabs again, but we are moving it to Instagram. So all you have to do to be in with a chance for winning £100 is make sure you're following us on Instagram, tag a friend and tell me exactly what you would do with £100 if you were to win it. Basically, I'm going to keep track of everybody who's entering a competition, and we will do a live draw on this channel in a couple of weeks' time. We'll be pulling a winner out of all those people who have met that criteria. Nice transparent draw. Everybody has a fair chance of winning. So why not take yourself off the Instagram, make sure you're following us, tag one of your friends and let me know what you would do with £100 if you win. In a little bit of real life news, Trading 212 are still not accepting new signups, which is unfortunate because a lot of people who watch these videos are interested in Trading 212. If I hear anything more about that, I'll be sure to let you know in the comments below. In just a few short weeks, it'll be time to decide where I'm going to open my ISA for 2021-22. At the moment, I'm still considering Trading 212 for that, for reasons I have talked about in a previous video. Everything I'm investing in Vanguard, where I currently have my ISA, is available in Trading 212. I have given some consideration to moving my entire ISA over to Trading 212 for the tax advantages there. At the moment, I am still deciding on that. I'm going to give Trading 212 right up to the deadline to convince me that their platform is the right one for my ISA. There's also the added hassle that I would in fact have to sell out of everything in my invest account in order to move it over to their ISA offering. You can't just transfer your stocks and shares from the regular invest account to the ISA account, so that would be a bit of a pain. But anyway, that's enough jibber jabber for right now. Let's get straight into the Trading 212 portfolio. Alright, so here we are in Trading 212. You can see there my account is now worth about £7,051.81. £6,831 of that is invested, and I've got about another £160 on order at the moment, so it's not showing up there just yet. You can see that represents a return of minus £8.7p, 0.12%. Now, I have said on this channel many times that this particular return is based only upon the assets that are live and you have a live position for right now. So anything that you have cashed out as a profit or a loss is not reflected in these particular returns. Any free shares that are rolled up here that are now in play and active are not rolled up in these returns. So take it with a pinch of salt. It has been a bad couple of weeks, but it is not as bad as this. I do keep a track of return on investment separately, which I will show you at the end of this particular segment. Let's get the easy ones out of the way first. No dividends this month. None of the shares that I have yielded any dividends these past 4 weeks or so, so you can see the dividends are still sitting at £108.74p. Alright then, let's get on to the fun stuff. Let's see what I have been buying this month. The first thing I bought was another 15 shares of the iShares Global Clean Energy ETF. Anyone who watches this channel will be sick of hearing how much I love clean energy. So when these guys have dropped down from round about £14 a share down to round about £10.63, it was too good an opportunity for me to miss out on. And while this means that my average buy-in price has gone up now to over £8 a go, it doesn't bother me in the slightest. I think this is still a really good long-term play. I got in with these guys pretty early on, and as a result I saw a really good return on investment, but just because I like the return on investment numbers doesn't mean I'm not going to buy in again when there's a good opportunity to do so. Too many people like to see a nice return on investment that prevents them from buying in again on their winners. I'll not be doing that. I still think it's very early days for clean energy, and I am delighted to be hoovering up as many of these shares as I can at this particular point in time, bringing my total holding to 73 shares for clean energy ETF. The next thing I bought is Palantir. I bought 12 shares of Palantir at different stages throughout the last week or so. I missed these guys on the way up, and after peaking at round about $39 a go, I was able to average in for round about $27 for 12 shares. I'm happy with that. I think Palantir have a real chance of doing something quite extraordinary. There are tons and tons of videos about this on the internet, so I will not go into all the reasons I picked these guys. So last week the lockup for the initial investors' shares, that time expired, so they were then able to sell their shares if they didn't want them anymore, which led to a flood of shares on the market, which led to this significant dip in price. It's a short-term thing as far as I'm concerned. I am hoping that Palantir over the long term are going to be pretty amazing, and I am delighted to get 12 shares in at around about $27 each. The last thing I bought this month then is VanEck Semiconductor ETF. So VanEck, you may have heard me talk about these guys on the channel before in terms of their esports and video gaming ETF. Well, they've got a semiconductor ETF out now as well, and as you can see there, I have a pending order for 12 shares in this particular ETF. It's more tech for my portfolio, which may or may not be a good idea. Certainly people are going to think that I might be too heavily invested in tech, and it is a fair accusation to throw at this particular channel. However, there's some companies in here that I just think are too good to miss in terms of long-term development. Overall, I think it's a nice way to get a holding in all these different tech companies, all doing good stuff, all making things that are very important to technology going forward, like cloud computing, computer gaming, PC power, AI, all these different things. I think it's a good one to get involved in. So I've taken a small holding. I'll see how it pans out and maybe add to it in the future as we go. Alright then, let's have a quick rundown of the portfolio to polish this section off. So first up we have Amazon. So Amazon have been taking a bit of a dive over the last sort of week or so. The other thing, unfortunately, that is playing havoc with my portfolio right now is this Forex impact here. So you can see there that even though I've made 13% on my Amazon shares, I'm actually down nearly 10% on foreign exchange. Foreign exchange is just part of this game. If you're going to buy foreign shares, you're going to have to suck up any swings in foreign exchange. That's just the way it is. No point in crying about it. If anything, it offers an opportunity to buy more because the share is actually cheaper because you're getting more dollars for your pound. As far as I'm concerned, I'm just carrying on as normal. It's not necessarily anything you can do anything about. It is worth bearing in mind, but as far as I'm concerned, business as usual. Next up is Avast, the cybersecurity company. So their share price has slid along with the rest of the technologies market at this point in time. I'm still happy with Avast. There's a big hole to be filled, cybersecurity going forwards, and I think they're in a decent position to do that. Coca-Cola plods along there, 3.5% behind at the moment. I've heard Coca-Cola referred to as a zombie stock that just lies horizontal, and indeed there hasn't been an awful lot that has changed over the past while for them, but they pay a half decent dividend. I think a global name like this is pretty good to have in your portfolio, but you can let me know in the comments down below exactly what you think. GSK is another one that has seen a gradual decline here in their share price. They haven't really done anything, you know, it almost looks like they're going a little bit stagnant here. They are planning to split their company sometime in 2022, I believe, so I think I'm going to hold on for the shares for a little while longer, but it's definitely one I'll be keeping an eye on. The price has slid quite markedly in the past sort of 3 or 4 months, worth keeping an eyeball on. Next up is the electric vehicles ETF. I've talked about electric vehicles before. They are coming, whether you like it or not. Electric vehicles are going to be the big thing. Still early days for this ETF, I think, and again, that's another one that has had a bit of a slide recently and presents a buying opportunity. I'll probably be trying to add more to this ETF in the coming weeks. iShares Global Clean Energy ETF we've talked about. It's doing pretty well for me. Legal in general continue to surprise me in the face of difficult Brexit conditions, shall we say, but you know, they're doing well, they pay a good dividend, I'm holding on to them. Lloyds is doing surprisingly well for me. I believe they reinstated their dividend this month, so that might have boosted the share price a little bit as people start to look at them as an income stock. Luckin Coffee, no, Luckin Coffee. I put the Scud on them just as they started to look like they were turning things around. They filed for bankruptcy, which doesn't necessarily change the position of their company, but it didn't half hurt their share price. It's a consideration that I will just get rid of these guys now. I'm going to think on that for a few more days, see what happens, but you know, I just don't see anything good happening with Luckin now going forwards. Microsoft, very pleased to hold Microsoft. Forex is another one that has killed me ever so slightly on this particular purchase. 5% wiped off, but you know, just makes them cheaper for the next time you buy. National Grid suffering a little bit as well. Palantir we've talked about. Persimmon, the house builders, I'm still hoping for good news on this front. I'm not be adding to my position until I get some news on that. Renewables Infrastructure, another clean energy company, they have actually weathered the storm in this particular dip pretty well. Only 1.76% behind. Again, they're another one that pays a useful dividend, so I'll hold on to these guys. Unilever, well, that's a household name, pretty defensive stock, although they have also slipped. They pay a good dividend, fairly stable company. I'm happy to have them in my portfolio. VanEck Semiconductors is the new one I've talked about, and VanEck Vector Video Gaming and Esports ETF. Computer games, esports, going to be big business going forwards. That's another one I'll be trying to add some more to my position in this particular one. So that's it. Let's just have a quick look at what the ROI means according to my spreadsheets. So we can see here that I have actually only invested £5,810 of my own money. If we combine that with nearly £700 worth of free shares and dividends paid out as well, then we can say that this particular account has a paper value of around about £1,240, which is a flat return on investment of about 21%. So as I say, trying to keep this transparent, that includes free shares. That's money that I have not contributed, but it's now rolled up and considered by Trading 212 to be part of my portfolio. If we take the free shares out of it, then the paper profit falls to about £545, which is still around about a 9.5% return since I opened the account in round about February of last year. Of course, that 9% takes into account all the things that were bought and sold prior to this particular video. So if you are interested in seeing how we got to this point, there is a playlist from all my Trading 212 videos, which would give you a complete run through as to how we arrived at this point if you're interested in that sort of thing. So here we are in Vanguard. You can see the portfolio here is now worth about £15,390, which is a personal return of about 12.76%, £1,165 in the green since I opened this account round about October of 2019. So I've had a few different questions about this particular portfolio and I'd like to address those in this video. So if we first of all look at the investments here and we look at performance, you can see that I opened this account in October of 2019 and we are now up to February of 2021. So I have contributed in total £14,225, which has returned me £1,165. The rate of return is 12.7%. This is not a flat, simple return on investment calculation as a percentage of what you've put in total versus what you've been returned in total, but rather Vanguard favour a weighted rate of return method of calculating exactly how much money your money has made for you. So we can click on this information to get a little bit more about that. So the rate of return basically looks at how long each portion, each deposit you've made has been working for you and what that deposit has returned for you. What this really means is that the length of time you have held money in this account is taken into consideration as to how they work out what your overall rate of return is. So for sake of argument, just this month I deposited another £1,000. You can't take into consideration returns for that £1,000 as part of an overall return on investment because the money has only been there a couple of days. It dilutes the overall return on investment figure. Similarly, if I was to deposit another £20,000 today, then that wouldn't necessarily change the rate of return for the money that has been working for me up to that point. So from that point of view, this figure makes an awful lot of sense. From other people's point of view, they prefer to see the overall investment and how that has worked for them as a flat, straightforward calculation. Okay, so that's where we are overall. If I go and look at my particular investments that I hold now, you'll see that that figure is only £706 for a similar kind of figure invested. And that's because these particular investments, everything except this FTSE 100, these positions were only opened in October of last year. So they've only had 4, 5, 6 months to actually start working for me. So this deposit of £14,000, which has returned £706.44 to this point, is only 4 or 5 months worth of returns. It doesn't represent the lifetime returns of this £14,000. So Vanguard in that respect are offering me an overall picture, and then in terms of your actual investments you have working for you right now, they're offering a valuation or at least a return on what that money has got you to this point. Okay, clear as mud for that part. The only new thing for this particular account is that I have added £1,000 worth of FTSE 100 ETF. And that was really in an aim to diversify my portfolio ever so slightly. Now, if I go and look at insights, which was something somebody asked me about last time, you can see that I am very, very heavily weighted in North America. And up until about 2 or 3 days ago, when I bought the FTSE 100 ETF, that was rolling at about 70%, which is probably just too much. So over the course of the next few months, I'm going to try and spread that cost, spread my investments across the world a little bit more. But overall, I've said before, I'm very, very happy with investing in North America. The only issue here at the moment, particularly, is the weakening of the US dollar. However, it's still the biggest economy in the world, and it's still something I want to have plenty of exposure to. So there we are. And within those investments then, you can see that Apple, Microsoft, Amazon, Google, Facebook, Johnson & Johnson, Berkshire Hathaway, Morgan, Taiwan, Semiconductors, Alibaba, etc. are the biggest holdings in my investments. And again, you can see the sector allocation is a little bit better in terms of diversification compared to something like geographical diversification. And then finally, you get to see the performance of the last 3 months overall of your investments. So just until a few weeks ago, this was sitting pretty high at 3 or 4% for the last 3 months. Unfortunately, the stock markets of the world have taken a little bit of a dip recently. So dips, peaks and troughs are all part of the price of admission for investing in the stock markets, as I've said before. It's not something I'm particularly concerned about. Prices have really just dropped to what they were around about a month ago. We're in it for the long term. I've said it lots of times before. As far as I'm concerned, I'll be keeping my investments consistent, staying the course, carrying on with the same sort of strategy, and overall, I'm pretty pleased with how things are going. Any thoughts or comments? Of course, I welcome them. Leave them down below in the comments section, and we'll get some conversation going about it. So that's it for this video, folks. If you have found some value in it, please hit the like button. Please consider subscribing if you aren't already. Don't forget we have that competition over at Instagram as well. Get yourself over there for a chance to win £100. If you have any comments or questions on any of the content in this particular video, please leave a comment down below. I do try to respond to every comment that comes in. All that's left for me to say is thank you very much for watching, and I will see you in the next one.